Mic test. Alright, so if you take a look at the 4 hours, we have this higher time frame SMT, and then we are trading into this inefficiency. The only thing that I don't like about price within this inefficiency is that price is staying very long inside this 4 hours fair value gap. Okay, so that is the thing that I don't like to see. Right, so far we have SMT on the lower time frames as well. If you look at ES and NQ lower highs, ES higher highs, and we have managed to close below this last up close candle that took out this high here. For NQ, we have closed below these 2 consecutive up close candles, right? So obviously from here you can tell that NQ it's the more bearish asset right now. Right, so on the daily time frame, what I can see is that maybe NQ wants to run this low again, because if you look at how far it has traded into the daily fair value gap, it's only by, let's take a look at low 441.5, so it's only like 6 points below this low. So I think it can drive in slightly more before any reversals to the upside. Additionally, today is a Wednesday as well, and there is no news drivers. I am anticipating much like a seek and destroy condition and more like accumulation rather than expansion towards the upside, even though that is the higher time frame bias. Right, looking at the weekly chart for NQ, we have reached into the weekly fair value gap. For ES, we are way above it, so it remains to be seen if it wants to return back into this this volume imbalance here, which is basically the new week opening gap for this week. Right, just keep in mind that this week is the last week of August, so based on the previous weekly forecast for this week, I've mentioned that I don't really think that we are going to take out this high, so that should set the expectation that I am not anticipating expansion towards the all-time highs for this particular week. Right, maybe we could get it at or during the first half of September, but I don't think it's going to be this week itself. Right, so looking at the 1 hour candle, 1 hour time frame, you can see that ES is respecting this old inversion fair value gap so far. In NQ, it is respecting this balanced price range right here. Okay, so let's see what it wants to do. We have relative equal highs here for NQ, right? And if you just purely judge the current price action as it is, we are more jagged on the downside, which means we have more stop hunts on the lows as compared to these smooth highs. So for now, what we can focus on is this up close candle here. So if we are bearish, we should want to utilize this as the order block to send the price lower, right? But as you can see right here, did we take the rejection block? No, I don't think so, right? So let's see if we can get any reaction of this bearish fair value gap, or if it forms any bearish order block, or if it is able to form any bearish fair value gap right down here. Great. The other thing to note is that we are below the weekly opening price, so it's better not to, based on today itself, it's better not to rely heavily on shorts because we are below the weekly open, and it's Wednesday, so yeah, just be cautious. Alright, the other thing is that I will only turn bullish if we can trade above this balanced price range for NQ and this old inversion fair value gap for ES. As I have mentioned for the most recent video, the trade recap video, right? As long as we are below these two fair value gaps annotated on ES and NQ, we are bearish. If we can manage to trade above it, then I would start to look for buy side delivery. I am on the 30 minutes candle, 30 minutes time frame now, because we are about to close this candle. And if I were to just use yesterday's range, we have tagged the range high for ES, and for NQ we have left this highs, right, SMT, and price has closed below this bullish fair value gap right here, as you can see. So this, I want to see it act as inversion fair value gap to send the price lower. For yes, we are still trading within this fair value gap, so as long as we are within or above this fair value gap, I don't think it's going to expand lower. So right now you have the crack in correlation, right, whereby you have ES most likely unwilling to run lower, but then you have NQ which is showing strong signs of wanting to trade lower, right? So I would be looking at this fair value gap right here and this two up close candles as the proportion on the block. I'm going to remove this fair value gap for simplicity. For simplicity, I don't know how to pronounce that word properly right now, but to keep it clean, right? Keep the charts clean. I don't want to have too many shaded areas or lines. I am going to mark a line down here so that I can see when it crosses it. In this decorrelated market environment, even if I were to enter off any trades, I will look for the lowest hanging fruit available. So I wouldn't want to target any external liquidity to be safe, right? Because anytime one of them can fail in their current direction and then move together with the other asset, whichever one, and then you would be wrong on the trade idea if you sort of overstay your welcome in this current condition. So right now, if I were to force a bias, it is going to be bearish until the order flow change for Nasdaq. Let's take a look at the 50 minutes. So 50 minutes we have already traded into this CB here. Let's see. Then this is kind of wonky. it could just chop around and range if it wants to generate or to engineer liquidity on both sides of the marketplace, because tomorrow we do have two news drivers, one at 8:30 and one at 10 a.m. on Thursday. So they might want to utilize those news drivers to take out both sides of the or both sides or one side of the marketplace. So my plan here is very simple for today. If I don't see anything that is obvious, I'm not going to take a trade because it's low probability conditions. Unless I get something on the charts that is screaming, please take me now, you would be stupid if you don't take that trade. So if only that kind of setups present itself to me, then I would engage. Other than that, I would just be content watching the price action. Alright, so right here, we can see that ES is starting to give up the ghost, and NQ right here was a beautiful sell-off. If you are trading on a 50 minutes, you'll be able to see that return back up into this fair value gap and then dropped off lower. This fair value gap here, let me see. There's nothing. It's just this fair value gap for me. Right. So I would anticipate, let's see, 15 minutes, 5 minutes. Right, so as of now, I would be looking at the previous day's low as the terminus for the draw on liquidity. On the 1 hour, we do have this fair value gap right here. It's not too clear for NQ, but it's clearer on ES. Alright, let's see, 15 minutes. For ES, this is previous session's low. Next low would be here. I would target the rejection block for ES right here to be safe, right? Now let's take a look. Five minutes. Three minutes. I guess it's going to be a speedy delivery towards the previous day's low. This is a 1 minute candle, by the way. 50 handles from the open to this low here. About 50. Right, we should not come back up here if we are to attack the previous day's low. Let's see if there is a fair value gap here. If not, then you would have to look for inefficiency above this swing high, which would be this fair value gap right here. If it forms the fair value gap, that would be good enough to send the price lower. All right. So let's paper trade this. I'm not interested in putting money behind this idea here. because we are really near the terminus. This would be more like a scalp, and that is not my preferred method of trading, if you will. I mean, preferred model, right? So let me just put one order here. Stops will be above the swing high. Take profits below here. That's not too bad. Like, it's close to 2R, but it's not 2R. It's slightly less. If we close below these two up close candles, this is going to be a breakaway gap until we take out the low. If I get filled on this order here, I would expect it to run into this objective before 11. So that is the time limit that I would place on this particular trade idea. I will explain that when we hit 11 a.m. Alright, look at ES. It has traded into this inefficiency here. Okay, I'm gonna put one more order here at the order blocks open. Alright, so it has 5 more minutes to trade into that objective. But as of now, I don't like this reaction here. Okay, I don't like it. It has completely overlapped the fair value gap. That's number one. Number two, if you look at this order block here, we are trading way past the 50%. Alright, so right now, this is more like a probably going to be a losing trade here. I am probably going to get stopped out. If we don't get a strong displacement on this candle or the very next candle. Alright, so we have a fair value gap. I'm gonna cut my losses here if it ever trades into that fair value gap. 4 more minutes. Ten more seconds to close this candle. Alright, I'm gonna cut my losses here. 3 more minutes. If it can run into that objective in 3 minutes, I would be amazed. But to me, that is unlikely. What I'm concerned about is, if you take a look at the 50 minutes, we are forming a fair value gap right here, and if we do not attack this liquidity here with this candle, I am assuming the very next candle we are going to trade up into this fair value gap, and then we go lower. This is the reason why I was saying that I want price to attack this low here, this objective here, before 11 a.m. because 11 a.m. we would have completed this candle. Let me just remove the executions for now. Right, so if it runs without me, I'm totally fine with that. Okay, I would much rather preserve my capital than to take a bet. Okay. So 2 more minutes. And if you're wondering where that 50 minutes high is, it is this fair value gap right here. I mean, it's a good sign that the body is staying below the mean threshold, but I just don't like how we are digging into that 50% 3 times. "30 more seconds. Surprise me." Amazing run here. Alright, so now we have taken out external liquidity on NQ. I'm no longer interested in shorts for now for NQ. Right, so let's take a look at ES. Personally, I don't really want to short the stronger asset, but let's see. 5 minutes, 15, 1 hour. Right, I'm gonna remove these 2 levels here. They are no longer relevant to me. This one right here, I'm gonna shift it down here. just gonna chill and see what price wants to do next. Well, to be fair, it did attack the low at 11 a.m. I just noticed that. You see, for this type of moves, I usually would like to get in. Let's just say I was watching the charts for today. Okay, I like to get in when price is here. That would be the first leg. I mean, right after the first leg distribution. So usually if I don't get in around these levels, I would much rather just let the trade run, because I'm not really good at trading a continuation model, right? So in this case, if I were to force myself to trade a continuation model, I would have to use this 50 minutes fair value gap with this stop hunt. This would be the last stop hunt, right, before lower prices, and then I will look at any fair value gaps within, and I'll mark out these levels, and I would watch on either the 3 minutes or the 1 minute. Right, so I mean, it is obvious that right now I am talking based on hindsight, and I would have never have taken, maybe I would have, but I don't think I would have, because of ES price action. Okay, but anyways, I would be waiting for those levels to be traded to on the 50 minutes, and then on the 1 minute I will look for a change in the state of delivery or market structure shift, or whatever you want to call it. So right here, this is the first time we have completely overlapped a down close candle after it has traded into the 50 minutes inefficiency. Right here, this consecutive down close candles, it overlapped these two up close candles, and then it formed a fair value gap. So if I were to annotate this fair value gap right here, ICT mentions that if you're bearish, you don't really want to see the bodies closing above 50% of the fair value gap, which is what it did right here, and then eventually just melts off. So from here, the risk would be this rejection block, and the targets would be here. That would be 1.5, and obviously if you're looking for the previous day's low, I think somewhere around here, that would be 3.72R, right? So this is the type of trades that I would try to take with a very low leverage, because I don't like to take this type of models. This is just me. I would prefer to take something like this. In this case, I would take ES because it's much more obvious, right? You have this up close candle. This is the bearish order block. with the fair value gap on a 1 hour chart, and then it has taken out a swing low as well. This down close candle is potentially a breaker on the lower time frames, so I would take this and then I would take it down all the way to this low or the rejection block right here. Okay, so that would how I would frame the setup if I was watching the markets during that time. So right now, what's next? Let me just take a look. I think NQ can run it down one more time, because if you take a look at the 4 hours, this inefficiency here, we almost tagged it, but it has left it open. So I believe the next leg the next leg lower, we would be targeting this inefficiency here. So you would like to mark out the quadrants. On the 15 minutes, let's see if there's any inefficiencies that I can utilize to take it down to this level here. NQ is just not giving you any chance. This was the only chance. The only logical entry that I can see. Or should I say the only entry that I would even consider. Alright, so what are the levels below? First off, you have the 50% between 0 and 25 right here. This would be here. So the midpoint of that is the first target. Okay. Yes, it's just wow. Look at the candle. Look at the range. If ES is going to follow through on NQ, then for tomorrow, I am going to look for the weekly fair value gap as the drawn liquidity for ES. Right, I mean, take a look at NQ right here. Okay, so let me just remove these levels here. No longer important because the move has already started. It doesn't make sense for me to chase. That's number one. Number two, we have just left. I mean, if you take a look at the 6 hours, I'm going to remove this as well. It has traded up into this bearish order block multiple times, and then right now it has left the building for now. Alright, and for NQ, this was the bearish fair value gap after SMT. So this is a strong one. As you can see, price wasn't even able to reach 50% of this fair value gap, which indicates strong bearishness. Right, which is why at the start of the stream, I told you that if I were to force a bias, I would be bearish. Right, it's all based on these higher time frame market structures. Okay, so on the 4 hours, same thing for this inefficiency here. It's quite choppy on the 4 hours, right? And then I mentioned that we have this SMT as well. ES, high highs, NQ, low highs. Okay. So let's see where is the weekly fair value gap for ES. That would be here. 4 hours. It's way below, way down here. So there's still a lot of range left into this objective. Right, so if I were to, let's see. I think the easiest trade is going to form if we can just close below this fair value gap. It is going to do something like this, trades up and then drop. This would be the easiest trade setup for this week if we ever reach here. 6 hours time frame, any candles closing below, that would be the trigger. But obviously it would be best if they can give some sort of fair value gap between this, I mean within this candle here. So which means we are probably going to have a very nice Asia or London session, trade up higher into that particular fair value gap and then continue to drop lower. That would be a good trade setup as well. But because this candle has yet to close, we are closing this in about 43 minutes. Let's see if we can close below this swing low. If not, it can always just do this, you know. At one point, this candle here is a large down close candle and look at where it has closed. So it can do something like this, but we are left with 40 minutes. The likelihood of that happening is quite low, to be honest. So I am thinking that we are probably going to get a fair gap in a trade setup tomorrow during the London session heading into New York session. As time flies, or as time goes by, you would be numb to missing this type of trades or this type of movement in the markets. So if you have seen one of my recent videos for this day itself, this is a Thursday, even though I was right on my analysis that we are going to get a reversal on Thursday, I wasn't able to capture any move from this high to this low. Same thing for NQ here. So this is a rather large range, right? And I wasn't able to capitalize on that, which, to be honest, it kind of sucks. But over time, you understand that it repeats, right? So you don't have to worry too much that you missed the move, because the next bus is always coming. You just have to be slightly more patient than before, because you're gonna wait for the next bus, and it takes time. So right here, let's just say I was able to take this trade. This trade today, it would have completely nullified this day, right? Because if you take a look at the range, it's comparable. Okay, and maybe tomorrow it's even better. So there's always another day. So yeah, I'm kind of numb to missing these types of large range days, even though it would be nice to be part of it. Like, for example, the Tuesday trade that I took, it was this particular candle here, right? Same thing. And the other thing that I usually like to do is I like to zoom out when price is moving very fast, because on the lower time frames, what you would see is this, and then you'll be most likely beating yourself up, like, how did I not capture this move? How can I get in to continue the trend, stuff like that. And usually that gets you burned, just like how I was doing this 1 minute trade right here. Okay, I almost got burned. Is it here? No, sorry, it's over here. I almost got stopped out, right? And as you can see, yes, right here, it came up all the way to the exact high of this bearish order block. So things like this tends to entice me to want to go down into the lower time frames to capture the move left remaining, and that sort of FOMO, I would say FOMO because I feel that way when I was trying to finesse this trade here, that which is also why I logged into the paper trading account, because I knew that I would most likely take a loss. Okay, so that is a way to alleviate that fear of missing out without any realized loss. Okay, so let me just head back into the 6 hours time frame. So when I zoom out, it gives me a peace of mind, right? And I know what I would be looking for the next day or the next few days, right? I would sort of like form a bias heading into those days. Right, I think if nothing else happens in the next 7 minutes, I am going to end this session here. Because the move has already started and it has already ran and completed the objective, which is the previous day's low. There is basically nothing to do until it starts to accumulate again, starts to range again, and until then there is nothing for me. So I wouldn't want to waste time sitting in front of this chart here looking at this. Right, so there should be some form of retracements or something on the lower time frames that you can definitely trade it, but I'm totally not interested. I would rather just wait it off, wait for another setup. So I like it trading into this 25% level either by today or tomorrow, and then we would probably get some retracements. But if ES is unable, if ES has not yet traded into this feather gap or this week, the new week opening gap, then it is possible for me to see NQ continue lower. So let's see. Why am I losing my voice? It's nice to see my model repeating, even though I didn't take it. Two R, not too bad. 3.5. 5. Alright, I'm gonna close this session here. There is nothing for me for now. So yeah, I hope you find this insightful, and I'll talk to you again in the next round. Good luck trading.